Be Wealthy and Smart, episode 1528.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to ask, what is the job market telling us? Because there's conflicting reports coming in regards to what's happening with jobs. So yesterday, there was a better-than-expected jobs report in which non-farm payrolls rose by 147,000 in June. That's above the Dow Jones forecast from economists for 110,000. That's 37,000 more than was expected. And the unemployment rate fell to 4.1%, while economists had projected an increase to 4.3%. So the jobs data is looking very, very strong. Why is that surprising? Because there was also a report this week that ADP released showing that private payrolls decreased by 33,000 last month. And that was raising fears that perhaps the economy was weakening. But because of the strong jobs report, it looks like we won't get a cut in July from the Federal Reserve. The better-than-expected jobs report caused the S&P 500 to hit a fresh record high, which is pretty amazing despite all the fast-changing trade policy and geopolitics going on in the background. So let's look for a minute where the jobs are and what we know about jobs right now. We know that state and local government jobs accounted for much of the job growth in June. And healthcare and social assistance also saw notable payroll expansion in June. Government jobs saw the largest month-over-month sector growth at 73,000. That means government jobs accounted for half of the 147,000 total non-farm payroll growth in June. So when we look at where did the June jobs come from, as I said, government was number 1, healthcare was number 2, leisure and hospitality was number 3 with 20,000, construction number 4 at 15,000, transportation and warehousing at 7,500, information technology 3,000, financial activities 3,000, retail trade 2.4 thousand, utilities 600, and some areas lost jobs like mining and logging, wholesale trade, manufacturing, and professional and business services all had a loss of jobs. The government jobs were mostly state government payrolls, which grew by 47,000, and local governments added 33,000 jobs. The bulk of those new jobs on both levels were in education. On the other hand, the federal government payroll shrunk by 7,000 jobs in the month. According to CNBC, that's unsurprising given the continued focus on government efficiency initiatives under the current administration. So part of what the Fed looks at when they determine whether to raise rates or not is what's going on in the job market. And because we had weaker payrolls initially, people were optimistic that perhaps the Fed could cut in July. But now with the stronger than expected report, many people are thinking those interest rate cuts are off the table for July, and maybe even for the entire year. But I'm not in that camp. I do believe that we're going to see lower rates this year. If you haven't subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.